Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on November 8th. My name is Ian Saunders, and joined as well here by Joseph Tizzolo. Tuz, nice to see you here.
Yeah, we got a lot to talk about this week. So it'll be good to go through everything. A lot of movement post-election. So there's a lot of exciting stuff to talk about.
Yeah, a lot of stuff going on. It's like the week-long Super Bowl for market analysis, I guess. There's definitely a lot to talk about. We'll try to get through it all quickly here because I know that you might have some stuff popping up that might lead you to drop off the call. For those that might not be aware, Tuz's wife is expecting any
Yep,
moment. So congratulations to you.
any moment.
Thanks for hopping on the pod here. We'll mic drop before you take off for a little bit, but definitely a lot of movement to talk about. Good movement, right? I mean, we're coming in here and seeing broad U.S. equities pretty much across the board at all-time highs, which is, I mean, certainly a welcome sign, and frankly, not that rare of a sign from what we've seen over the past year. Feel like we talked about all-time highs quite a bit, but definitely some surprising moves from some of the broader spaces. I mean, you're seeing the S&P posting notable gains, but technology related areas, Nasdaq 100 is up another 1.3% today. Small caps have had a lot of big movement. Were you surprised to see the magnitude of movement maybe after the election results were kind of finalized this week?
Well, I was a little surprised in the magnitude of the movement. I was talking to GMUS, another analyst, on Monday. We're looking at the 1-day VIX, which looks at essentially the implied volatility of the options expiring the next day, and that closed at 30 on Monday. So you had a lot of volatility. And to give a frame of reference for that number, the last time the 1-day VIX got that high was August 5th, right around the yen carry trade, dispersion trade kind of blow up sort of deal. And then before that, the last time we saw the 1-day VIX that high was during the regional banking crisis. So there was a lot of hedging activity going into the election. I think the fact that a winner looked like, it looked like Trump was going to win by around midnight, 1 o'clock in the morning, pretty early. We didn't have to go into a scenario where we were waiting 3 or 4 days to figure out who was the winner of the election and things like that. We saw that volatility unwind almost immediately. The 1-day VIX dropped all the way down from like 30 to I think 15 or something like that the next day. And obviously an unwind of hedging exposure will be pretty good for equities. And I was a little bit more surprised to see how well small caps did relative to the large caps and things like that.
Yeah,
More
I
so the
mean,
magnitude than anything.
yeah, absolutely. I mean, when we were looking at like trailing week performance, I mean, you have the international equity markets relatively flat, but everything else up over 1% from the broad equity market perspective. Dow up over 3%, DIA up over 3% over the past 7 days. Q's up almost 2%, likely going to be 2% after today's move. SPY up almost 2%. But to your point, IWM, that Russell 2000 ETF, I mean, up 7% over the past 7 days. That's quite a big move for the small cap front. When we're looking at Qs, I mean, I think it is interesting to note, even though the movement hasn't been as sharp, we are seeing QQQ break out to a new all-time high, spread triple top breakout. Pretty notable to see. I mean, we hadn't seen as much improvement from Qs maybe this year as certainly as we saw last year, but it is still continuously moving higher and back at all-time highs. But to your point, the small cap side of the coin, IWM, we see a pretty good looking chart. I mean, two consecutive buy signals, not quite at all-time highs like a lot of other areas in the large cap space right now.
Mm-hmm.
One box shy, I believe, of that all-time high mark, which is sitting at 240, 235 currently on the chart. But that's, I mean, a pretty good, consistent looking chart throughout 2024.
Yeah, and it's one box away from testing at its all-time high at 240 there, back from December of 21. Um, so we'll see if this movement kind of continues. The biggest knock on small caps wasn't necessarily that they weren't going higher. It was just they lacked relative strength versus the large caps and the mega caps and things like that. Now, a few things coming out of the election. you I did see some stuff about how small caps would stand to benefit a bit more from lower corporate tax rates, especially if the business is located in the U.S. You look at something like, regional banks, they don't have, international operations really to the extent that somebody like J.P. Morgan or Goldman Sachs or somebody does. Um, so you know, and that's the area that really led small caps higher was those regional banks. We'll get into that a little bit later. But from a broad equity market perspective, I mean, everything looks pretty good. And it was looking good going into the election anyway, right? It's not like we were seeing things break down and then mark like a big bottom and then start to just rocket higher. I mean, things looked pretty good going in, regardless, too.
Yeah, and I think the point you mentioned there, things looked good. They have looked good for a while. Domestic equities has been atop our broad Dolly rankings since December of last year, right? So I mean, it's been consistently strong. It'd be good to see the small cap show some more improvement. We've seen more consistent improvement recently, but that hadn't seen that kind of big breath thrust like you'd really like to see from the small cap space to continue to kind of carry the market. We're seeing most areas, though, I think something to note and something we'll be keeping an eye on. A lot of those big equity indices are pretty heavily overbought after the movement over the past couple of days. So I mean, wouldn't be surprised to see markets can't go straight up forever. Right? It'd be great if they could, but they're not. We wouldn't be surprised to see some consolidation over the near term. That's not necessarily meaning that the Trump trade is off. It could just be some normalization in the market, right?
Yeah, and it's not just in equities that we've seen that. You look at other asset classes too, the dollar rates, things are pretty extended within their 10-week trading band. Obviously you get a really huge news announcement and the market wants to adjust right away, and then there's usually some type of digestion period or consolidation period after that.
Yeah, and that's healthy. I mean, you go back to like the swimming analogy. You got to come up for air at some point, right? You can't,
Mm,
unless you're Michael Phelps, you can't stay under the water for too long, right? So,
yeah.
when we're looking at areas that have shown a lot of some sharp moves, yeah, I think it's pretty interesting to look underneath the hood at the domestic equity sector breakdown. You mentioned some of the rate movement. We'll dive into some of that maybe in a few minutes here. But on the domestic equity sector side, something that's certainly affected by interest rates, but has been really, like you said, seeing a lot of movement on the small cap side has been financials. We saw no changes to the rankings just from a 1 through 11 perspective over the past 2 days. We did see some movement when we're looking at the relative strength underneath the hood of those, though. Financials being the biggest beneficiary of movement over the past few days, already in first heading into this week and just distancing itself from the rest of the field there up at the top of the rankings.
Yeah, for sure. And it's been quite a year for financials. I wouldn't have had that on my bingo card that financials would be the top ranked sector, especially with kind of the rate volatility. A lot of it was like higher rates were not great, and then lower rates were. It's been a flip-floppy type of deal when it comes to rates and financials over the last year, but they've consistently done really well. That's the sector I cover for our weekly update videos. I've kind of just said, if you want financial exposure, stick with the large cap names, the names that everybody kind of knows. Insurance was doing really well. I did, we had talked about improvement in regional banks, but, I did not expect KRE to be up 13% Wednesday. Just a crazy move there.
Yeah. Yeah. And I mean, you see that even though regional banks aren't going to be the only thing driving those sector rankings. I mean, when one area hasn't improved much and then all of a sudden it has a 13% day, that's going to lead to some relative strength shifts, right?
Yeah. Yeah.
Yeah. And when we're looking at the other end of the page, I mean, we did see a little bit of a few signal improvement from like communication services, from utilities. Um, Energy still sits dead last, but it did gain a few signals too. And I think that is, I mean, that's an area I've heard a lot of commentary over the past couple of days. You had energy being one of, if not the best performing sectors during Biden's presidency, and you had energy being one of, if not the worst performing sectors during Trump's presidency. But nonetheless, all the energy stocks have been attributed to more improvement when Trump kind of moves into office, right? And so we still see energy ranks dead last in the rankings, but we are seeing a little bit of a spike, and a lot of that's because from some spikes in crude oil recently, right?
Yeah, and I would say the general trend in crude is still lower. It seems like, entering this year there was this range between, the mid 60s up to around $85 a barrel. And then over the last couple of months, it's condensed down to the mid 60s up to, the upper 70s. And it's kind of continued to trend lower. We did see a bit of a spike in it earlier this week, but we're still at $72 a barrel on the trend chart for crude oil. Um, we'll see what happens. I mean, the thing with crude is a lot of these supply chain shocks that immediately happen when we see conflicts and things overseas. Once those are, accounted for, um, we usually see the crude prices start to slow down. And this is the seasonally weak period for crude as well. So I think there's a couple of headwinds there, even though we did see a spike. Now, I really didn't expect energy like XLE to do as well as it did either. That was a little bit surprising to me. Now we did see, clean energy stocks take a huge hit yesterday. I think the solar ETF was down like almost 10%. Um, so, you're seeing a bit of, disparity there, but typically when we're thinking about energy, we're talking about, the Exxons, the Chevrons, Phillips 66, those type of stocks.
Yeah, I mean, I think the market's expecting in a Trump administration kind of easier pathways to more drilling, kind of more
Hmm.
opportunities for them, right? Which seems to be the play there. But in the crude side, just from the commodity perspective, I mean, to your point, we've seen a sharp move higher, still a negative trend, still on two consecutive sell signals. It's sitting at that bearish resistance line at the negative trend line, which sits at 73. So it would need to go to 74 from the current level to kind of break through that range. But I think it is. We haven't seen much. We haven't seen it be able to really fall much lower than the upper 60s recently during any decline it's had. And on the flip side, we haven't really been able to see it improve too much either. So we'll see how this resistance and kind of under support kind of play out over the next few days. But the U.S. dollar also sits in a pretty not similar, but similar kind of just from a straight technical perspective on a sell signal and a negative trend, but a notable rally. The dollar was one of the biggest movers. I know I was sitting there watching some markets over election night, and there's dollar spiked up pretty hard, and it's kind of stuck around that 105 mark over the past couple of days.
Yeah, and that's another thing that, crude didn't get into overbought territory, but the dollar is trading right at the top of its trading band as well. Now, this has carved out a range between about 100 and 107, 107, let's call it, on its trend chart since, late 2022. So it's a lot of choppy action. Um, you know, the dollar move, and then we also saw rates move quickly higher a Wednesday. That subsided back a little bit. We've seen some retracement in rates today. Um, but you know, like the dollar, rates are getting into overbought territory as well. So I think along with equities, it wouldn't be too surprising to see some type of consolidation or at least some type of, small pullback, especially after just the moves that we've seen over the last 2 days.
Yeah, and I mean the default chart of the dollar is still a negative trend, but like you said, it has been flip-flopping trends. After being extremely consistent from a trend perspective for several years, all of a sudden we start talking about that and it starts flip-flopping trends. I think most of the trend changes have generally been kind of positive and looking at like currency hedging. Using it, it's still played out relatively favorably or profitable, but it hasn't been consistent at all over the past couple of years, and it just continues to have a wide but notable trading range. Rates,
Mhm.
like you mentioned, I mean, we don't want to dive too much into the projections or stuff from a rate perspective because we follow the movement as it happens, not necessarily predicting where it's going to go. And there's a pretty important decision coming out this afternoon. We're reporting the podcast midday on Thursday. We're about an hour away from some comments from Fed Chair Powell around the pending interest rate decision today. But nonetheless, some sharp movement, notable movement that we can talk about. To your point, pretty heavily overbought, 120% overbought for TNX on the 10-year yield index side of things is not something we see very often, right?
No, I think we were talking about it before the call. It's the most overbought TNX has been since early 2018. Um, Now, we are at some kind of resistance here at 44.50 on the default chart. Um, we are heavily overbought. Um, the Fed meeting this afternoon, it seems almost a foregone conclusion that they're going to cut 25 basis points. I think the biggest thing that's going to come from that meeting is what they view the path moving forward. Um, there is a pretty significant chance, I think about a 33% chance that they don't hike at the next meeting after this one, or excuse me, don't cut after the next meeting.
I hope they don't hike. But
Yeah, that would throw a wrench in things.
yeah,
Um, but really since they first cut rates, they did that 50 basis points. The economic data has been decent. Some of the inflationary data hasn't come down as much as they were probably hoping. So, I think rates like the dollar are going to be in kind of this consolidation phase for a while until we get a clear direction on whether inflation is really sticky and the rates are just going to have to stay higher for longer, or if we do see some of the labor market weakness that we've seen creep up over the last few months really start to come into play when it comes to the economy.
yeah, yeah, absolutely. I mean, the dual mandate there is clearly inflation has steadied off a little bit, but the unemployment aspect of it, I think there's a lot of questions that are arising, potential movement that could happen after the presidential election results too. So I think that there's a lot of questions there. I mean, again, not to make projections, I wouldn't be shocked to see. I mean, Powell's been saying higher for longer for a while. Wouldn't be shocked to see that 33% probability kind of come to fruition in December, but that's why we have the charts and the indicators kind of keep us moving in the current right direction as long as we can, right?
Yeah, for sure. And I think the biggest thing too, when we think about rates and Fed policy, I mean, the Fed has essentially said, okay, we're going to focus pretty much on the Fed funds rate. They haven't changed their, quantitative easing or quantitative tightening stance right now. They're kind of just doing a balance sheet runoff. They're not, adding even more supply to the market other than, treasury issuance and things like that. But when you look at like long-term rates moving up, this fast, a lot of tightening is done by that movement and rates. I mean, really, when you're looking for, getting a mortgage on a house, people usually look at the 10-year yield for things like that. So, in September, the 10-year yield was at, 3.65%. We're now almost at 4.5% on the 10-year. I mean, that is, almost a full percentage move, a point move. So there's a lot of tightening that's just happened based on how rates have moved further out on the curve as well. So we'll see what they decide to do moving forward. There's going to be a lot of eyes on that.
Yeah, absolutely. I know housing took a pretty big hit over the past as rates moved higher. Real estate did not do too well over the
Real
past week.
estate did
So
not do well, and another place that did not do well was home builders.
yeah,
I think I saw somewhere that Lennar and Horton were down like 5% each on Wednesday. Pretty big divergence from the rest of the market.
yeah. What about the home improvement areas? Not to go off on too much of a tangent there, but I mean expectations would generally be that if people aren't moving, they might rework a little bit, right? I mean, I think that Home Depot chart still a weak attribute, longer term perspective two for fiber, but two consecutive buy signals, a much more constructive technical picture there for Home Depot as than some other areas. So maybe that could be an interesting area to look for if real estate continues to decline.
Yeah, and interesting with Home Depot, that tested its all-time high in October from the end of 2021, rejected, but we have reversed up back into X's today. So it looks like it's going to make take another shot at that all-time high here soon for Home Depot.
We'll see. We'll see what Fed Chair Powell has to say about that this afternoon. So,
Yeah.
but cool. I think that I mean we could keep talking about different election indications, movement, and stuff, and probably have a lot longer podcast and just what people would want to listen to. But was there anything else specifically, Tuz, you wanted to hit on?
I mean, not too much. I mean, I'm still watching the mega caps really closely. I think where the mega caps go, the rest of this market's going to go. We recently added some new indicators that look at like an equal weighted index of the top 10 and top five stocks in the market. So I'm keeping a close eye on those. The tickers or the symbols for those are Mega 10 and Mega 5, all spelled out. So MEGATEN would be Mega 10.
Okay, gotcha. And then, I mean, a lot of the movement, market movement, for especially in the mega cap side of things, is going to be pending around the video earnings announcement, which is coming in a couple. Still got a couple weeks ago. Hard to believe. 2 weeks. 2 weeks from yesterday. Then we get in the video earnings finally at the end of like toward almost Thanksgiving. But that's coming out November 20th. I know a lot of that movement's probably pending around some of that.
Definitely.
Yeah. But cool. We'll definitely have some more to talk about around that front, and certainly around the mega caps and stuff over the course of the next week or so. But Thus, thanks for hopping on here.
Yep.
Good luck with the youngin. If we don't see you back here next week.
Yeah. We'll see. It's any day now. My wife would like it to be sooner rather than later.
That's exciting. We're happy for you there. And thanks everybody for tuning in this week. We'll be back to touch base with you next week.